What's going on, everybody? Welcome back to the channel. Demetres here with eXp Realty. And if you're here, obviously you've read the title on how to invest in condos in 2024. Obviously, as markets change, so do investment strategies, which is what we're going to dive into today. So right now, I'm actually obviously in my car, about to head up to a condo that my investor client just purchased. We're going to do a purchaser visit, test all the appliances, make sure everything's in good working order before closing. But I wanted to bring you along because I think that this property is a really good example of something that you should be looking to buy if you're looking to invest in a condo in 2024. And that is whether it is purely for investment purposes or whether you're an end user who's going to be living in the condo and just keeping, investment strategies in mind. And as always, before we get into the video, if at any point you're watching this video and you want to get in touch with myself, you can go to the first link down in the description. You can book a call directly into my calendar where we can have a chat about your real estate plans. And let me know down in the comments section below if you're liking these types of videos where I kind of take you on a ride along and show you some real case studies as to what is actually happening out there with myself and my clients, versus say doing the sit down videos. I think they're both really good, but let me know which one you guys prefer. So as I mentioned earlier, obviously the real estate market is totally different today than it was, say, 2 or 3 years ago in 2021 and 2022. So obviously we would want to change our investment strategy and how we make decisions when it comes to buying real estate. And I think that this is an area where a lot of people are really confused right now because you're seeing a lot of investors selling their properties, with interest rates being high. Maybe they've bought too many of them and the overhead costs are starting to get to them. But what if you're looking to get into the market or you're looking to start your portfolio and you're trying to figure out how to navigate it? Realistically, the same thought process that went in a couple years ago is totally different today. And I think it's one that a lot of people are not talking about because, investors have taken their foot off the gas. But as we head into, rate cuts and rates are starting to come down, consumer confidence is slowly going to start coming back. Okay, well, you're going to think about how you're actually going to pivot and maybe get your first, second, or third property and how you're actually going to make money on it. So back in the day, the investment strategy, and I say back in the day lightly, like this is 2 or 3 years ago, it was all about cash flow. And realistically, like when you're investing in real estate, you want to have good cash flow numbers, which means, the property is going to rent for more than it costs you to carry. And at the end of the month, you're going to be left over with a little bit of money in your pocket. But that's great if you're, in the United States in a cheaper market or even other parts of Canada where the market is much cheaper. But realistically, Toronto has not been a cash flow positive market for a very long time. But even in 2020, 2021, the strategy was to get a smaller condo, whether it was a studio condo, a small 1-bedroom, a small 2-bedroom, because obviously you're paying for these condos price per square foot. So the smaller it is, the cheaper realistically you're going to get it because you're buying less condo, but they kind of rent in terms of property type. So for instance, a small 2-bedroom is going to rent for 2-bedroom prices, whether it's small or whether it's 100 square feet bigger. But if you buy the 100 square foot bigger condo, well, you just paid $100,000 more for it. So you might as well get the smaller one because it rents relatively close to the same as the bigger one, but comes at a much cheaper price, not to mention that maintenance fees, property taxes are also better. So your cash flow numbers were much better on those property types. And these types of properties, the small 2-bedrooms, the small 1-bedrooms, the studio apartments, they were very competitive for investors because the numbers just worked out the best. But what I'm saying now is maybe the strategy has changed because at the end of the day, if you're going to get into, say, an investment property in Toronto, your cash flow numbers are, relatively speaking, out the window anyways. You're going to be cash flow negative on everything. And when we really break it down, how are we going to make money on this property? You're going to make it on the buy and you're going to make it on the sell. You're not going to make it in the monthly numbers. So what used to be a game of getting, a small shoebox condo, I've actually pivoted a lot of my investors to go for more end user focused buildings. And with there being so much inventory on the market right now, this is your chance to get a very desirable condo, one that would normally get, in a hot market, 5, 10, 15 offers, and everybody would be fighting over it, whether it's got a CN Tower view, it's got an optimal layout with a parking space, it's in a very coveted building. One of those factors would make it just so astronomically hard to get in a hot market. Well, now when we have so much inventory, you can actually pick one of those up, and you might even be able to get a very good deal on it. So I've pivoted my investors from focusing on the monthly numbers and be like, okay, maybe this one will cost you an extra $100 or an extra $150 a month versus the super efficient, smaller layout. But at the end of the day, I know that when the market does heat up, here we are, we've got a corner unit with a CN Tower view that I know people will be dying to get into a hotter market. And this is our opportunity to get a very good buy on it. Now, that doesn't mean that we're going to go out and buy the biggest condo out there, with jacked up maintenance fees in a horrible area. No, we're still going to keep our general investing principles in mind. We want to get something in a building that has maintenance fees under $1 a square foot. And, we're going to want to get something that was built after 2018 where there's no rent control on it. So that way we have maximum control on staying up with market rents and, flexibility when it comes to selling the property and making sure that it's as marketable as possible. And that's why I brought you to this specific condo that my client just bought. They are an investor. They kept end user in mind when they purchased this one. And you'll see it's a corner unit, very good layout. It's got a CN Tower view. And I could see how down the road, someone is going to want to pick up this place for themselves to live in because it's just so desirable. It's not cookie cutter. It's just, there's some things about it that would really make somebody, jump for it when the market tightens up, which is when we're going to decide to sell it. And the other factor is obviously on the buy side. Are we able to actually get a deal on this property? And I've done other videos in the past where I go over my different strategies on how to find more motivated sellers or deal with the banks. And if you're interested in being on one of those notification lists where you get sent all the bank-owned and motivated seller properties in the downtown core directly to your email, just go down below and click the second link there and fill out the form. It'll ask you for your email, and then it'll throw you on that list so that you're automatically notified as soon as a motivated seller or bank deal come up on the market. But are we getting a deal on it? Because if we can pick it up for a good price and then we know that this is going to be something that's desirable down the road and we could sell it for top dollar, that's where we're going to make the most amount of money, which is exactly what we had with this condo. I'll get more into the details on the buy on this because I think we absolutely stole it once we get upstairs. But with that being said, I'm going to get out of my car and we're going to head upstairs and check this place out. Okay guys, so we are upstairs in the unit, and like I said, I wanted to bring you along because I think that this is a really good example of what I meant earlier when I said to buy an end user focused building for investment purposes. So I'm going to take you to the front door. I'll give you a quick tour and then we'll touch on some points here as to exactly what I mean. But flipping the camera around, obviously we got the front door right here. And then you've got a big closet off to the right, as well as your lovely washer and dryer. Now, to your right here, you can see there's a den. And I typically say that, you should get a den that could potentially be used as a bedroom. But in this case, we decided to still go for this, even though this den is like strictly an office, just because we got this for the price that we got it for. And obviously the other features that come with it still made it very viable. So it still made sense, but typically I like to get dens that, you could maybe enclose as a second bedroom for investment purposes. But in this case, this one still worked. Now moving along again, we've got the bathroom here and obviously very modern, very new. This building is only about a year old. So I want to say that there was one tenant who had lived in here prior and then they sold it. The bedroom, which, I mean, we got to fix up some paint here before we get our tenant in here, but it's got a great view out to the north and it has a proper window, which I know doesn't sound like much, but it's not a junior it's not a junior one bedroom layout, which is very nice. It's a proper one bedroom, again, end user focused. That's what people who are buying condos to live in are looking for. And then this is the best part. This is the living room area. I'll flip the camera around so you can see a little bit better. This is the selling feature right here. So you've got a corner unit for a one bedroom, which is very, very rare. The layout's good in the fact that you've got your kitchen kind of tucked on this wall. And then you've got this whole wall for your TV and a really big open area for your couch and a little dining table over there. You've got multiple views. So you've got a Juliet balcony off to the north here. And then off to the east, you actually have your balcony. It's kind of raining today, but it's got a fantastic CN Tower view. And then as you look back north, you've got a view of the rest of downtown. It is protected in the fact that we've got condo townhouses right here that we don't have to worry about getting knocked down to block the view. Could you potentially lose some of this in the future? Maybe, if one of these buildings gets knocked down, but the big thing is we've got the protected view of the CN Tower. So to my prior point, imagine this condo on the market 2 years ago when there was very little inventory. This is something that, an end user, somebody who's coming in here to buy, to live in themselves, could get a little carried away. Maybe they've lost out on a couple offer day scenarios already. They walk in here, we have it beautifully staged, it looks amazing, and we get 15 offers and somebody just throws a pile of money at it to get it done. Will an investor do that? Typically no, because they're investor focused, and if the numbers don't make sense, they don't move along with the purchase. So we bought this specifically knowing that down the road, there's a really good chance that an end user will want to buy this, and we know that the end users are more likely to give us the most amount of money for our property. Now, knowing that we're gonna make money on this property when we go to sell it, and not on the monthly numbers, it makes more sense to go after something that is a little bit more desirable, even if you have to pay, say, a little bit more per square foot. Going for something that is going to sell to the right person when you decide to move it, I think is the new strategy for making money on these. In terms of the buy side, as I mentioned earlier, it's really important that you get a really good deal on it. And I'll let you know that, as I mentioned earlier, I've got my little, strategies for how I did that. This property came off of one of those strategies. In the broker remarks, the listing agent wrote motivated seller. So, okay, now you've opened the door for me to write you an aggressive offer. And this was one of those properties. In this particular scenario, when I saw the property, it was actually listed as a northwest view, which doesn't have a CN Tower view, but it is in fact a northeast view, which does have a CN Tower view. And I kind of caught that through the pictures and the mistake on the listing. So I'm like, a lot of people probably don't even think that this thing actually has a view. That coupled with the fact that it was actually tenanted. So this thing was on the market for a little while. They originally had it listed for, I want to say, just under 700,000. I saw a pretty significant price drop, which is a good sign of, again, motivation. And then the tenant had actually left, but they didn't update the listing. So a lot of people see tenanted on the listing and they're just not interested, because obviously you got to deal with getting tenants out, which is not the best scenario. But you got to make phone calls. You got to find out what the real scoop is. So the person who originally bought this off the developer actually paid, I want to say it was about $750,000. By the time they paid closing costs and upgrades, they were about $800,000 into this condo, and we picked it up for $598,000. So we got a stellar deal on it. The clients are very, very happy with the purchase. The location of the building is incredible. We're to Augusta, so we're right off of Portland and Richmond, right across from the waterworks. Another really good thing about this building is that we get to use the waterworks, which is, a pretty expensive building as comparables, with it being right across the street and of somewhat similar build quality. So this makes a lot of sense for investment purposes. Could we have gotten a property for a better price per square foot? Yeah, we picked this one up about $1,000 per square foot, but what good is picking up something at $900 per square foot if you're going to turn around and sell it for $1,000 a square foot, say, years later, where this one, we got a really good price relative to what we are buying. And we know that down the road, the right buyer is going to come in and give us the best possible price, assuming obviously we come in here and we do our staging and our timing is good with where the market is at. But that is the overall strategy. I think that focusing on the monthly numbers and the, $100 or $200 per month in terms of efficiency of the condo doesn't make as much sense as making sure that you get the right property that the right buyer is going to be looking to buy in the future. So with that being said, I actually got to get to work here because this is a purchaser visit. My client's not here for the purchaser visit. They're out of town, but I'm just running through, checking all the appliances as we always do to make sure that they are in good working order before closing. Very curious to hear your thoughts down in the comment section below. Do you think that this makes more sense? Or do you think it makes more sense to worry about the monthly cash flow numbers? So really curious to hear your opinion. As always, make sure you like, comment, and subscribe, and we'll see you on the next video.